And Stanbic Holdings Plc has announced a 12.2 billion shilling profit after tax and a total dividend payout equivalent of 50% of its earnings for the financial year ended December 2023. The financial institution operating in both Kenya and South Africa attributes the 34% year-on-year growth to improved interest and non-interest income as it accelerated lending and kept its operating expenses in check. Our reporter, Jasmine Wamboi, tells us more.
Bank's largely commercial and affluent client base seems to have spared the bank from the ravages of a challenging macroeconomic environment. In the words of Joshua Igara, the CEO of Stanbic Bank Kenya and South Sudan, the Stanbic Holdings full-year results for 2023 were as impressive as can be.
I would say they're a very strong set of results this year. Looking at the headwinds, especially on the macroeconomic side, the difficult operating environments, high interest rates, difficult in terms of the operating environment. Our customers are going to remain resilient. The bank has performed.
The NSE-listed lender has defied challenges to post a 34% net profit growth to 12.16 billion shillings from 9.06 billion shillings in 2022. This on the back of increased interest and non-interest income, even as it kept its operating expenses in check. The Stanbic board has, on the back of the jump in profits, raised the dividend per share from 12 shillings and 60 cents to 14 shillings and 20 cents. Stanbic recorded a net interest income of 25.6 billion shillings in the period under review from 18.9 billion shillings posted in 2022. Non-interest income, mainly drawn from fees and commissions, jumped to 15.67 billion shillings from 13.14 billion shillings. Loans and advances to customers grew to 356 billion shillings from 266 billion shillings.
In this strategy, we delivered a 39% growth in profitability in 2021. We delivered 26% growth in profitability in 2022 and 34% growth in profitability in 2023.
The bank's client base, made up mostly of affluent clients and established commercial entities, have seen the non-performing loans ratio remain at an impressive 9.47% in a sector where the figure has averaged above 14%. The bank's balance sheet share in local currency also jumped from 52% to 56%. This sets up the bank to a higher interest margin. Stanbic's stellar performance amid a challenging banking sector landscape highlights the bank's resilience and its ability to navigate market dynamics effectively. Jasmine Wamboi, Citizen TV, Nairobi.